perceiving trading as a school subject. Once you can have a funding account for, let's say, at least 3 months in a row, then you have an A+. Things are so simple about trading that they tend to become overcomplicated. A high win rate does not mean by all means long-term profitability. Hello everyone, Andrew here. I have seen and appreciated the feedback that I have received on Instagram, YouTube and Twitter, but also the continuation feedback I received from those inside my private mentorship. It's interesting to see what time can do for people and what it means to use time for the right purposes. The volume of messages that I receive regarding the results achieved has never been as high as it has been this year. Unprecedented. It's really unseen so far. Back to back, those that I know and text me show their progress, ambition and courage to make their own identity in trading. There are people who have assumed that it will take time for them to get to the place where they really can be satisfied with this journey, the place where they all really want to be. Among the most important messages, I remember this one from a member from my mentorship. His name is Richie and he has been inside FX trading from the very first beginning in Romania. He decided to put a trust into what I wanted to build, and 3 years later he hit his first $5,000 month in profits, which is 3 times more than he earns at his actual job. He had one of the longest journeys because it took him almost 3 years to get to this point, but he never once decided to give up, even if he lost a lot of money, time and people around him sacrificed a lot, but he kept on going and kept having that same mindset and that same dream that he wanted to achieve for himself. So he ended up doing it, and I'm very, very proud of him, and I want to take his exact blueprint to present to you guys and to everyone that becomes my student. After all, even if we are talking about trading, it does not mean that we are necessarily talking about something that needs to be put on a pedestal or, on the contrary, be seen as an elaborate betting system. It shouldn't be underestimated or overestimated. What needs to be done is to recognize that there are more and more people taking this in a serious manner in this field of knowledge. That there are people who invest their trust, their confidence, and we're not talking about money, in a field that may have absolutely nothing to do with their daily lives or work. And that's absolutely normal. Even if I didn't go to college or university, that doesn't mean that I was more or less qualified than the rest to learn or to trade profitably. And even because of that, the best analogy can be made with perceiving trading as a school subject. Now, don't imagine I'm referring to that kind of hard subject such as chemistry or physics. It is the fact that once a thing is undervalued but the effort to be put into it is overvalued, then that needed balance is created. That's why I chose the example above. Trading must be seen as a subject. Trading must be the subject that tells you things about yourself, firstly by controlling the emotions it creates, and then through the financial profit that comes with that control. Once you can have a funding account for, let's say, at least 3 months in a row, then you have an A+. You have accounts with multiple funding companies, then you get another A+, and so on. You have only graduated trading when you can do it constantly, repetitively, and also scalable. And since then, everything basically becomes just a game of numbers and imagination. And it's never too early or too late to learn about a field, document yourself, because trading has no age. But the only criteria for qualifying to be a trader is to have the will to develop your self-control. Things are so simple about trading that they tend to become overcomplicated. All a trader really needs to do is understand the structure, understand the areas to choose to trade from and the why, and then find a way to confirm those areas and find those fine entries. After getting enough understanding of what you're doing, so basically after taking the right time to educate yourself, to take the time to test it, to form your experience, to shape your eyes, to look at the charts, then you're done. When I open the charts and look at them for a few seconds, I already know what I want to see, because I took the time to form my vision on the markets, to understand exactly what to look for, and based on that to take and to choose to take a setup I want to be involved in, or just let a setup pass because I don't want to be involved in. Equally important to understand is the fact that not all areas will hold, and that every trade does not have to be a winning trade. A high win rate does not mean by all means long-term profitability. What matters is the percentage, the profit percentage gained within a month, not per month. After all, trading is based on probabilities. There are and will be a lot of drawdown periods. There are and will be times where you feel like you want to change your strategy. There are and will be times when you feel like trading may just not be for you, that you are not made to be a trader. And that is absolutely normal to have a lack of trust about the performance you can do in an area where others have invested thousands and thousands of hours of their lives, even tens of thousands of hours in mastering in their own education and in trial and error in order to master this skill. The good thing now compared to a few years ago is that you don't have to waste so much time learning on your own when you're just a click away from the best educational resources and from the best mentors in this industry. Now all it is about desire. Seeking the ambition to cast away the laziness and the procrastination, and I think that's very important to acknowledge, that you have everything you need to actually build yourself up for a skill that is worth millions of dollars. And the only price you have to pay is time, and maybe a small price for education, which eventually gets to be covered plenty, and maybe some small cost of getting a backtest software, or paying that trading view a subscription, or maybe buying a funded account that you will end up trading it. If there is enough discipline from the start, you don't even have to waste hundreds of dollars on buying funded accounts and losing them over and over. It is enough to have a very clear mindset regarding your own strategy and what you want to get done, and your path from there is only upwards. So now let's hop on the charts, do a quick breakdown of a trade that I took, and I'll see you guys after. Alright, so wanted to break down Euro USD. Just a couple of buys that were possible in the buy trend from 8th of June all the way to the second half of June. The very nice bullish trend. Now, the mistake that most people make again is they try to go counter trend. So every time they see prices moving up, they try to take sells without looking at the bigger picture. So 4-hour time frame, you see here we had a V-shape, a change of character on the 4-hour. That made this whole buy move possible. So once we had this, there was no reason to start looking for sells anymore. So what did price do? Usually when you have the first change of character or break of structure and change in order flow, price usually returns to the extreme. So here it came to the extreme week with liquidity being created, and I'm just gonna look on the 1-hour chart. We're not even gonna go lower, just because I want you guys to understand that structure is very important on the higher time frame. So 1 hour didn't make the high, came back here, retraced, gave a nice reaction, created liquidity, price came back in, tapped it. Here is where I took a very nice 1 to 2 trade, and then you see how it retested it once again. Why is that? Because price was getting ready to go very bullish, so it does retest a lot of times. So after you saw the other big move to the upside, price did return to the flip zone, which is this one, because from here price created a new break of structure to the upside. So price came back to it and then had a massive push. So how can you catch the continuation? Where I usually like to use the Fibonacci for that, just to find the potential areas where price can return to. I like using the 0.62 and 0.7 level. So here price pulled back very nicely to also the flip zone. These 2 weeks where price broke the high. So you see the high here, price broke this high, created a new break of structure, pulled back, created a new high. So then you can go again from the low towards the high, have that area there. You also have a very nice doji candle here. So price again pulled back there, made another push. So you just continue with the structure until you see it's ready to turn. So came back again, retested once again, and then had another big push. And then you see what happened here. Price came back once again for the retest. So if you draw the Fibonacci once again, just using the 1 hour time frame, you can see another nice wick down. Then the wick was completed, and then we had another push. But before the push, we had another break of structure here, which then created another potential entry. very nicely. So that's how you could have caught just using a simple technique that is 1 hour time frame, a simple Fibonacci, and then just using a very nice risk reward for every trade. If you use a 1 to 2, then you will most likely would have made a lot of profits on Euro USD in that certain week. So you see every trade was basically a very nice 1 to 2. You just set a trade, you forget about it, and then you cash in the profits. Thanks again for watching the video. I hope these tips have been helpful for you guys in your trading career. Don't forget to like, subscribe, and maybe share this video on your socials. It will help this channel grow and provide more high quality videos for you guys. Thank you again, and I'll see you in the next one.